Hey Goku, I'm about to order pizza. You want anything? I always share. You're the one that doesn't share. Now, what about that last time you had a whole farm worth of chicken? That's not the point. The point is you don't share. But do you want pizza or not? Well, joke's on you. I already ordered. It's at the door now. I actually got you a calzone so you can, not share. But if you want some fries, I'll give you some. Why you gotta be like that? Do you want it or not? I'll just put it here. Bro, I always gotta put you out. Cafeteria is this way. Hey guys, welcome back to the After Hours. I'm the E-tailed beast, and today we're gonna talk about parabolics and SPACs. So when it comes to this week, we saw a ticker that stood out among the rest, and there was a lot of tickers this week. And we saw this because we had a decent CPI report as well as holidays. July 4th went by, everyone had their hot dogs and hamburgers, and you saw fireworks inside of penny stocks when there was an uptick inside of healthcare stocks, financial, and technology. Now, when it comes to the healthcare stocks, all in one day, you saw 4 separate tickers go up 200%, and some of them give half their gains back before the market even opens. And then some of those tickers, they went even higher than their pre-market high, going over 200%. Now, these gap up shorts, they are everywhere. Now, what really stood out was the IPOs and the SPAC stocks. Now, the most exciting stock this week was EDTX. Now, EDTX by itself is nothing special. It is a SPAC. It's a SPAC merger. Now, when it comes to these SPAC mergers, you know that these are empty shell companies, tools used to create/facilitate a merger of 2 companies. EDTX, it's planning to merge with Z-Space. Now, Z-Space and EDTX, they're focused on VR and AI augmented technology. But that's not actually what sparked a parabolic in EDTX. What actually caused the move in EDTX was no news. That's what you thought on the surface. So when it comes to EDTX, it opened at 14 and went as high as $79. That was on Thursday. The next day in the pre-market, after it trailed all the way back to $40 and went back to $70. Now, it only opened for 20 minutes, trading only 500,000 volume before it was halted with a T12 halt. Now, when it comes to these SPAC stocks and IPOs, they are very volatile. They are no stranger when it comes to halts. But the halt of all halts is a T12 halt. That's when the SEC is wanting to ask questions. And we know this because MEOA was the most recent redemption SPAC. Now, when it comes to a redemption SPAC, this is usually something you name the SPAC after the fact. You got that? Okay. When it comes to SPACs, these are tools used to complete a merger of 2 companies. Now, sometimes the process when it comes to these SPAC mergers, it can be a little bit complicated, and other times it can be drawn out. Now, shareholders have to discuss the merger, and paperwork can be drawn up to extend the meeting. And we saw this exact situation on MEOA. Back on May 24th, you saw MEOA pause with a T12 halt. The SEC came out with a letter later saying that this was actually a volatility halt. Now, before the run on MEOA from single digits all the way up to $40, before it halted at $28, it was pre-approved for 3 months of extensions before this special meeting closed the merger. During the T12 halt, after over a month of waiting, one of the companies terminated the contract. That was DGTI. And at that point, MEOA was delisted from the NASDAQ. Now, when a SPAC is normally on NASDAQ and they get delisted, they usually open up on OTC. And at this point, you call this SPAC a redemption SPAC. Now, what redemption really means is that legally, you are required to repurchase the shares from your shareholders. You have to reimburse them up to the redemption price. This is typically $10, which usually creates a gap if the stock trades above $10. And when it came to MEOA, that traded up to $40. So the gap between $10 and $40, which is $30, that's how much each of the investors lost if they bought the stock. But if they shorted the stock, this may be a different story. For all the people that have been waiting for almost 2 months, they're finally going to take a deep breath on Monday when they get their money. And this all started back in May 24th. That's almost 2 months of pausing the stock with T12. Now, there's some T12s that go for years. On Thursday and Friday, you saw acquisition companies acting crazy. And one of those companies was EDTX. Now, EDTX, it went from $14 all the way up to $79 on no obvious news. But when you do your due diligence, you see that EDTX, it actually had the same situation as MEOA. It was pre-approved for almost 6 months of extending the special meeting discussing the merger. That's twice as long as MEOA, and it almost went up twice as high as MEOA. So it makes sense. EDTX, it only traded 20 minutes before it was halted. How long is it gonna last? Well, probably 6 months or a little bit less, because that's what happened with MEOA. And we still don't even know if it ends there. We'll figure it out Monday. Now, other than EDTX and MEOA, that represents the craziness inside of acquisitions and redemption SPACs, there was also activity inside of technology, healthcare, and finance. You had gap up shorts, bounce shorts, and it was all a nice reaction to the CPI report and the 52-week high. But for the most part, everything's going parabolic, and they want to. But other than my theory that EDTX is actually sparked from the updated news from MEOA, I like to think that these parabolics are used to train the new apes, whether they're the buying apes or the shorting apes. They're used to train the apes to focus on anything that moves. Now, when it comes to the market, when there's a lot of activity going on, there's gonna be stuff that repeats. There's gonna be things that rhyme. And I always see this as the training period when it comes to the market. The market is training you to look for a specific type of setup. It's making it easy for you to recognize a specific price action. And right now, SPACs and parabolics is what everyone likes to chase. Because when it comes to these SPACs and parabolics, they do not respect previous highs. It rips right through all-time highs, which is important because risk management is what you need to lead with. And you need to have some type of history to be able to have a decent risk management. Without a clear topping pattern, you shouldn't be in a trade if you're aiming down. And without a clear support or a decent catalyst, you shouldn't be buying the stock. Anything outside of having an edge, it is gambling. All right, guys, that's all I got for you today. If you like what you saw, hit the like and subscribe button, and I'll see you in the next video. Peace.